Right now, there are pickup trucks sitting on dealer lots that would take nearly a year to sell at the current pace, even after aggressive discounts like GMC cutting as much as $27,500 on one model. In this breakdown, we're going through 12 trucks that dealers are struggling to move based on real inventory data. The biggest surprise is that the worst performing one belongs to a brand that's currently celebrating a sales comeback. Starting at number 12, the Honda Ridgeline. This is the one almost nobody expected to be on the list. For years, the Ridgeline was consistent, nothing flashy, but dependable and steady in sales. That's no longer the case. According to Honda's own sales figures, Ridgeline deliveries fell by more than 30% in the first quarter of 2026 compared to the same period a year earlier. In March alone, sales dropped sharply from 4,831 units down to 3,379. That decline is significant, and it's already influencing production decisions. Reports suggest Honda is so unconcerned about short-term Ridgeline demand that it plans to pause production entirely for around 18 months, starting this fall at its Lincoln, Alabama plant. Production is expected to resume in summer 2028 with an updated model featuring a revised V6 engine. During the shutdown, the factory will focus on building more Pilot and Passport SUVs instead, which clearly shows where Honda sees stronger demand. On Ridgeline forums, owners are already advising each other to wait, expecting dealers to offer heavy discounts on leftover 2026 models once the production pause is officially confirmed. When a manufacturer effectively plans around reduced demand like this, it's not just a weak sales period. It signals a deeper shift in priorities. Next, number 11, the Nissan Titan. This one is already effectively finished. Nissan officially ended Titan production in the summer of 2024 at its Canton, Mississippi plant. There are no 2025 or 2026 models being built, so what remains on dealer lots is leftover 2024 inventory. Depending on the region, that might mean only a few units, or none at all. Because the Titan has been fully discontinued, it no longer shows up in standard monthly inventory tracking tools, so there's no current days of supply figure available. However, in its final years, the Titan was being heavily outsold by competitors like the Ford F-150 at roughly a 20-to-1 ratio. That wasn't a case of consumers overlooking it. It was a clear sign of extremely weak demand. Nissan is still required to provide replacement parts for at least 10 years, so maintenance isn't the immediate concern. The bigger issue is resale value. While discontinued vehicles can sometimes hold value due to scarcity, long-term depreciation usually returns as dealer support shrinks and demand fades. So if you find a leftover Titan still sitting on a lot, the real question isn't just the discount. It's what that truck will actually be worth 5 years from now with no new versions being made. Now, at number 10, the Ford F-250 Super Duty. Here, we're back to concrete inventory data. The F-250 Super Duty currently sits at about 158 days of market supply, with 40,633 units on dealer lots. In the last 45 days, only 11,576 units were sold, at an average price of around $73,547. In practical terms, dealers ordered heavy-duty trucks expecting the same level of contractor and fleet demand they saw in previous years. But that demand didn't hold up. At these price levels, the buyer pool has shrunk faster than production planning adjusted for. As a result, inventory is sitting longer, roughly 4 months deep and still growing in some areas. Rising interest rates have hit this segment especially hard, since many of these trucks are financed through commercial lending rather than cash purchases. Tighter credit conditions have also slowed fleet replacement cycles, which used to keep Super Duty inventory moving quickly. Moving to number 9, the Ford Maverick. This one is particularly notable because just a few years ago, the Maverick was one of the most in-demand trucks on the market, with waiting lists and strong early hype. Ford's compact, fuel-efficient hybrid pickup initially attracted buyers in large numbers, but the situation has shifted. Current data shows the Maverick at around 162 days of market supply, with 43,056 units sitting on dealer lots. Over a recent 45-day period, only 11,948 units were sold, with an average price of roughly $33,930 per truck. In other words, the same vehicle that once had more demand than supply is now sitting on lots for months, reflecting how quickly market conditions can change even for successful launches. What changed between then and now is fairly straightforward. Ford ramped up production to satisfy the initial surge in demand, but the hybrid excitement faded and competitors quickly caught up in the small truck efficiency space. Communities that once complained about 18-month waiting lists are now filled with buyers negotiating thousands off sticker prices on trucks that were previously hard to get and often sold by allocation only. That isn't really a market correction. It's more like a manufacturer scaling up for a moment that has already passed. Moving to number 8, the Ram 2500. Stellantis brands start appearing more frequently from here, and they continue throughout the list. The Ram 2500 is currently sitting at about 192 days of market supply according to CarEdge Pro, with 32,561 units on dealer lots and only 7,646 sold over the last 45 days, averaging around $68,554 per truck. That translates to more than 6 months of inventory sitting on heavy-duty work trucks. Normally a segment that depends on steady relationship-based sales, repeat fleet orders, and trade customers. When those buyers slow down, there's no strong impulse buy demand to compensate. The Ram 2500 isn't something people casually pick up. It's a necessity-driven purchase, and right now, fewer buyers need it urgently enough to absorb the excess supply. Within Ram-focused communities, a similar trend is being discussed at the dealership level. Sales teams are pushing financing incentives more aggressively on the 2500 compared to the 1500 lineup. That kind of shift usually signals where pressure is building to move inventory. Next, number 7, the Chevrolet Silverado EV GM's full-size electric pickup is experiencing a sharp slowdown. CarEdge reports about 199 days of market supply, with 1,897 units on lots and only 429 sold in the last 45 days, averaging roughly $74,864. Industry reporting on early 2026 truck sales highlighted the Silverado EV and Hummer EV as major weak spots, while noting that GM's other electric pickup, the GMC Sierra EV, was actually showing growth. That contrast is important. This isn't a case of electric trucks broadly failing. It's that this specific model, at this price point and under this badge, isn't connecting with buyers. GM is effectively letting 2 trucks built on similar foundations follow very different demand paths, and the Silverado EV is clearly the one struggling. For shoppers comparing the two, that gap in demand typically translates into more negotiating room on the Silverado EV compared to its GMC counterpart, even though the underlying hardware is nearly the same. Now at number 6, the Ram 3500. We're again looking at Stellantis. The Ram 3500 is sitting at roughly 200 days of market supply, with 12,021 units on lots and only 2,702 sold in the last 45 days, averaging about $77,020. This is Ram's most heavy-duty pickup, built for serious towing and commercial-level workloads. Even in that specialized space, demand has softened. At the current pace, existing inventory would take more than 6.5 months to clear, even if no additional trucks were added. Dealers are fully aware of this situation, and that awareness turns into leverage for buyers. Since the 3,500 shares much of its platform with the Ram 2,500, dealers often face overlapping inventory pressure across both models, which helps explain why discounts and incentives have become more aggressive in recent months. Moving on to number 5, the GMC Sierra EV. This is one of the clearest examples of pricing pressure in the entire list. GM didn't just adjust pricing on the Sierra EV, it slashed it significantly. The 2026 Elevation trim dropped from about $92,290 down to $64,495, a reduction of roughly $27,500. Lease payments also fell sharply, from $949 per month to $559. On top of that, GM added 2.9% APR financing and a $3,000 purchase incentive just to help clear remaining 2025 models. Even with all of that, the truck is still struggling. CarEdge data shows the Sierra EV sitting at around 225 days of market supply, with 2,611 units on lots and only 522 sold over 45 days, averaging about $81,439. This is one of the clearest signals in the entire data set. Even massive price cuts on an electric pickup don't guarantee faster turnover. That points less to a pricing issue and more to a demand problem. Finally, number 4, the Hyundai Santa Cruz. The Santa Cruz makes the list for 2 reasons. First, the numbers. It sits at about 229 days of market supply, with 9,641 units on dealer lots and only 1,892 sold in the last 45 days, averaging around $36,439. Second, the timing is just as important. Hyundai has already confirmed that the Santa Cruz is being discontinued, meaning every unit currently on lots represents inventory that the manufacturer has already decided not to continue producing long-term. For buyers, that puts the Santa Cruz in a strange middle ground. You're not dealing with a situation like the Nissan Titan, where production has completely ended and choices are basically gone. Instead, you're looking at the final stretch of a vehicle Hyundai itself has already decided not to continue, with nearly 8 months of unsold inventory still sitting behind it. Because of that, conversations around the Santa Cruz have started shifting in owner communities. Instead of focusing on trims and features, more discussions now revolve around resale value and what happens to long-term support as parts availability gradually tightens. The Santa Cruz was always positioned differently from a traditional pickup anyway. It's built on a car-based platform and marketed more toward lifestyle buyers than heavy-duty truck users. That kind of positioning never really created the deep, loyal demand base that can carry a model through a prolonged sales slowdown. Now at number 3, the Jeep Gladiator. This is where the data starts to feel a bit contradictory, and it's worth paying attention to that. CarEdge data shows the Gladiator sitting at about 233 days of market supply, with 21,173 units on dealer lots and only 4,090 sold in the last 45 days, averaging around $48,732. That's close to 8 months of inventory on a single nameplate. At the same time, Stellantis sales reports have pointed to the Gladiator as one of the models contributing to Jeep's overall sales growth in recent quarters. Both things can be true at once. Jeep can show brand-level growth while this specific truck continues to sit on lots longer than most others in this list. That's the kind of nuance that often doesn't get highlighted publicly, because the brand is up sounds much better than this particular model is struggling to move. Part of the issue comes down to pricing. Once Gladiators are optioned with the off-road packages most buyers actually want, they regularly climb past the $50,000 mark. At that point, they start competing with full-size half-ton trucks, which offer more towing capacity and more usable bed space for similar money. Next, number 2, the Ford F-150 Lightning. This one stands out with the highest market day supply in the entire CarEdge dataset, about 250 days. There are roughly 3,931 units sitting on dealer lots nationwide, while only 707 sold in the last 45 days, at an average price of around $67,631. The context behind this matters just as much as the numbers. Industry reporting tied to the end of federal E-5 incentives has pointed to significant financial losses for Ford, with the Lightning being one of the most visible examples of that slowdown in demand. CarEdge analysis also indicates that Ford is shifting away from a fully electric F-150 in its next product cycle, moving toward a different type of electrified option instead. That means the Lightning currently on lots is effectively in a wind-down phase, sitting on more than 8 months of unsold inventory while the company's focus moves elsewhere. For buyers, that creates a clear trade-off. The discounts may look attractive, but it also means you're buying into a model that's already on the way out. That can be fine if the only goal is getting a deal today, but it carries more risk if resale value or long-term software and support matter to you. Finally, number 1, the Ram 1500 and the wider Stellantis inventory buildup that most people aren't really talking about. This is the model that ties the entire list together. According to CarEdge Pro data, the Ram 1500 sits at about 162 days of market supply, with a massive 70,156 units currently on dealer lots. That's by far the largest pile of unsold trucks in this entire breakdown. In the last 45 days, 19,469 units were sold at an average price of roughly $60,056. What makes this interesting is that Ram brand sales have actually been improving recently. Stellantis reported Ram pickup sales up about 27% year-over-year in early 2026, with the Ram 1500 alone reaching 59,828 units sold in a single quarter, its strongest start since 2023. A big part of that rebound traces back to one decision: bringing the 5.7-liter Hemi 5.8 back after it was previously removed from the lineup. The reaction was strong enough that Ram reportedly received close to 10,000 Hemi-related orders within just 24 hours of the announcement. So yes, sales are improving now, but there are still more than 70,000 Ram 1500s sitting on lots. Both things are true at the same time. The reason is the buildup from earlier years. Between 2022 and 2024, Ram's market share dropped from about 15.9% to roughly 9.3%, driven by a mix of pricing increases, lineup changes like the removal of the Hemi, and the discontinuation of the budget-friendly Ram 1500 Classic. Through that entire period, Stellantis continued producing trucks at a pace that didn't match the falling demand. That mismatch is what created today's inventory situation. Now, even with a strong sales rebound, one good quarter isn't enough to clear years of accumulated stock. Stellantis executives have described 2026 as a critical year and are aiming for a 25% increase in retail sales, but those targets only affect future production, not the tens of thousands of trucks already sitting unsold on dealer lots. The Ram 1500 isn't carrying that backlog by itself. If you zoom out across the full list, the Ram 2500, Ram 3500, and Jeep Gladiator are all sitting in similarly high triple-digit market day supply levels. In fact, CarEdge research found that Stellantis brands accounted for 4 of the 10 slowest-selling trucks tracked nationwide in March 2026. That isn't just a handful of unrelated models having a weak month. It points to a broader pattern in one company's production strategy, showing up repeatedly across multiple vehicles in the same data set. For buyers, the key takeaway is simple. It doesn't really matter that Ram is telling dealers, investors, and the press that things are turning around. That recovery is about current sales speed, not the tens of thousands of trucks already sitting on lots from earlier production cycles. Every one of those units still needs a buyer, Hemi or not, and even with improving demand, the math still points to more than 5 months of inventory that has to be worked through. So if you're shopping for a Ram half-ton right now, you're not really negotiating against a struggling brand. You're negotiating against an overbuilt supply that the system is still trying to clear. That brings the full picture to 12 trucks across 3 manufacturers dealing with different levels of overproduction, with Stellantis alone responsible for a large share of the slowest-moving inventory. None of this means these are bad trucks. Most are capable, well-built vehicles that do exactly what they're supposed to do. The issue is simply that manufacturers and dealers planned for demand that didn't arrive on time. Now they're left holding aging inventory while costs like financing and storage quietly pile up behind the scenes. And that's where the opportunity comes in for buyers. That math works in your favor, but only if you know which models it applies to. The dealer across the table isn't going to volunteer that the Ram 1500 is sitting on a massive backlog, or that GM has already slashed tens of thousands off some EV pickups just to keep them moving. Those are exactly the kinds of numbers that should shape your opening offer, not theirs. If you want the full breakdown of every brand and segment ranked the same way, we've already covered it in detail in These 12 Trucks Are Sitting Unsold on Dealer Lots and Nobody Is Coming. Watch that next before you step into a dealership. And if you found this helpful, consider liking the video and subscribing for more breakdowns like this.